Hello, I'm Bernard Hickey from interest.co.nz and welcome to a Reserve Bank special. This morning the Reserve Bank kept the official cash rate on hold at 8.25%. But the real interest is in the outlook for interest rates and a significant change in the way the Reserve Bank views the outlook. Essentially, it has dropped the word significant from its outlook. The Reserve Bank has commented that it sees the official cash rate on hold for a time yet. Now, back on March 6, when it last made its statement, it said it saw interest rates on hold for a significant time yet. So it's dropped the word significant from its outlook. And that was significant for the currency markets, where the New Zealand dollar dropped against the US dollar by 1 cent to 79 cents. Now let's look a little deeper at the detail in the statement. Reserve Bank Governor Alan Bollard says the slowdown that's been happening in the last month or two was actually faster than he expected on March 6. And he's seeing weaker sentiment and tighter credit conditions. But he also sees short-term inflationary conditions persistently high, and he sees a risk of higher wage settlements flowing through into inflation. This is very interesting. Just a day after the end of the junior doctors' strike, they were looking for a 30% wage increase over 3 years. Now the question has to be asked, has the Reserve Bank Governor Alan Bollard gone soft on inflation? Inflation has been over 3%, now remember he targets 1 to 3% as his target band. It's been over 3% for 7 of the last 12 quarters. And if you look at the average of inflation over the last 3 years, it's 3%, right at the top of that 1 to 3% target band. So he has very little wiggle room, but it appears he's trying to wiggle. I'm Bernard Hickey. That was a Reserve Bank special from interest.co.nz.